And welcome back. You're still watching Closing Bell Southern Africa with the markets continuing on their winning streak, which we'll discuss in just a moment. But for now, Hendrika's on standby with your top stories.
Your top stories today, Tanya. South Africa's July retail trade shrank by 1.8% year-on-year, marking its 8th consecutive month decrease. The impact of tighter monetary conditions, general dealers and retailers in hardware led to the decline. The retail trade came in worse than the market forecasts of 1.2 rather. Annual retail trade sales remain unchanged after being upwardly revised by 0.3%. Moving abroad, China will speed up the introduction of more policies to consolidate its economic recovery as the economy shows tentative signs of stabilizing. According to state media, a flurry of support steps have been kicking in, with the $18 trillion economy showing better than expected figures, including bank lending, industrial production and consumption gains last month. However, the wobbling property sector still weighs on its economic outlook. That's all for your top stories today, Tanya. It's back to you.
Thank you, Hendrika. Joining me now for a look at the local markets and global markets is Terrence Hove, a senior market analyst. Terrence, thank you so much for joining us in studio today. So very much markets, or at least global markets, waiting on Fed. It very much seems to be an all eyes on Fed situation, with the Fed widely expected to hold rates. We'll be hearing of the announcements tomorrow. What exactly are the markets' ears listening to?
Yeah, good afternoon, Tanya. Yeah, I think this is probably going to be one of the biggest days in financial markets in the world of trading. And I think the comments, more importantly, during the press conference from the U.S. Fed Chair Jerome Powell is what's going to be in focus. Markets have already priced in, according to the CME Fed Watch, to about a 99% probability of a hold. And I think they did give us that forward guidance earlier, particularly in August at the Jackson Hole Symposium, that likely September 20 FOMC, there's going to be a hold. But what follows now is the comments which markets will be closely looking out for, any hawkish tilt towards, what the path rate of the interest rates in the US is going to look like. The expectation is actually for a very hawkish Fed, especially on the back of the US CPI figures that came out last week, Wednesday, and US PPI figures that, I had quite an uptick on Thursday as well last week. So that hawkish tone is what is expected, and we'll see that playing out in the price of the US dollar. Exactly.
And when you add to that equation oil, I mean, just a little over an hour ago, I saw Goldman Sachs raise their international oil price forecast to $100 a barrel. Should the markets be worried in terms of a relapse in inflation, and how that's going to pay out in terms of what the Fed's likely to do for the remainder of the year?
Yeah, so it's all going to come into, effect together. In particular, you'll see that energy is always a very big driver of inflation globally. If we look at Europe, for example, when we had the geopolitical crisis with Ukraine, just the biggest factor that drove the inflation in that region was energy. And in particular as well, the South African Reserve Bank had said one of the biggest importers of inflation in the South African economy is energy, fuel in particular. So that forecast of $100 a barrel is definitely going to be played into what the Fed is likely going to do at their next interest rate decision meeting, which will be hopefully given, or some kind of signal later on tonight.
Yeah, indeed. And I mean, looking at what Wall Street is doing right now, Dow Jones is up 0.5%, NASDAQ down 0.15%. But moving on, UK also came out with their CPI data. Now, surprising the markets, there was a dip to 6.7% in August, below expectation, but still sparking increased bets on a pause in terms of what the Bank of England is likely to do. Your thoughts on that?
Yeah, so that was quite a surprise, and inflation has been quite high in the UK for much of the year, and the expectation is that the BOE, the Bank of England, is is meant to raise. And I say meant, not that they've got the obligation to do that, but that's what markets feel they need to do. Another 25 basis points for them to really have a handle on inflation. But this surprise figure then supports the case that chances are there's going to be a pause at tomorrow's Bank of England MPC interest rate decision. What we do know and what we have seen is that the MPC is very divided as to what they should do. Pretty much somewhat split, some voting for a hike, some voting for a hold, and we'll see indeed if we're going to have a hawkish pause tomorrow from the Bank of England.
So in light of all of this, we have to ask ourselves, why is the rand so strong?
Well, I think the outlook that we have as an emerging market is starting to build. And inflation did come out, inflation figures for South Africa did come out earlier this day. It was a slight uptick, but still within that, 3 to 6% range, not quite the midpoint that SARB would like it anchored. So the expectation is that, cuts are now very closer than they are further, and probably that is going to start bringing back, strong consumer demand as more money is in the consumer's pocket going into the future.
Now, speaking of more money in the consumer's pockets, Southern Sun, local equity, coming through with a trading update, basically reporting a boost from the Nedbank World Cup, BRICS Summit, share price reaction up 1.65%. Are we likely to continue to see this kind of trend in terms of retailers? And I actually want to counteract that with what we've seen in terms of sales, retail sales, which is, it almost feels like a tale of two stories. How are you reading this? Yeah,
so I think, as you said, it's a tale of two stories, because with the retail sales, it's mostly the South African consumer, right? The rands that we have in our pockets. And we've not had quite enough the rands would like to have in our pockets because of the interest rate hike, the tightening that has really made, the liquidity for the normal person tight. Then when we look at the Southern Sun results, on the other hand, that's been really driven, as you mentioned, by these events, which have attracted a lot of offshore funds that have come into the market. So that expenditure that's come in, that's driven, that price is not driven just by the local market, but a lot of, for example, remember the announcement that were made that pretty much the whole of Sandton was booked out during BRICS. So we can imagine all of those surrounding hotels as well, and accommodation. We look at that massive success of the Nedbank netball tournament that took place, and it also brought in superstars as well. Quite a number of celebrities traveled to Cape Town to watch that. So that brought in a lot of feet on the South African shores. So I think, given the different drivers of those figures, right, we can't say that these were once-offs, right? If we were saying we were going to have one such event every quarter, then we can forecast and say we hope that it will be sustainable in the long term. But certainly, as, for example, the summer comes in, we've got more feet on shores. That will also, push up some more demand in that particular sector. Indeed.
Well, Terrence, thank you so much for joining us today and for sharing your insights. Always a pleasure chatting to you. That was Terrence Hove, a senior market strategist at Exness. So we'll now take a short break, and after the break, we'll be diving into those retail sales trade figures in more depth. Stay tuned.